Good night, everybody. Hi, good night.
Greetings.
Hi, Mario. How are you?
All is well,
Excellent, excellent. We made another week. That's a big deal. For sure. Okay, so we are already in week number what? 7, is it?
I believe so.
Wow.
Good evening, all. Good evening.
Hi, how are you?
I am great.
Wonderful, wonderful. Made another week, Hadith.
Yes, sir.
Indeed. Week number 7 already. That means how many weeks do we have left?
7.
7 more?
We on chapter 7 or 6?
I know 6.
How many weeks
I
do we have left?
What's happening?
It's 14 or is it 12 weeks? I know.
Is it 14 or is it 12?
I think it's 14, but you take 2 because 2 of those are exam days.
You sure it's 14?
That's what you told us.
I hope not, but it's possible. Just making sure that you guys are keeping your housekeeping together.
Yes, sir.
Okay.
We have a lot to talk about today.
Now, why didn't I think of that? I was thinking strictly the issues of chapter 6, but apparently there are some other issues on the agenda.
Yes, sir.
Okay. Well, let's give the others an opportunity to join the debate in Parliament. And we'll see what comes to the floor. Okay. So, how was the midterm, by the way?
The beginning part was okay. It's those last 2 questions.
Which the last 2?
It's a classified,
Balance sheet?
yes, sir. Classified.
What? That was the easiest. I'm sorry. Good evening. I
Yeah.
highly dispute that, Clinton.
Yeah.
That was the easiest.
Mr. Wilkinson, did you mark it?
I'm still marking.
Oh, wow.
Did you balance these?
Sorry?
If I everything balanced, but I know if I put all the fingers in, Crystal. The question ain't if I balance. Everything balanced. The question is, did I record what needed to record?
Well, if you balance, then according to accounting, you should have everything in.
Boy, listen. You reached my paper yet, Mr. Wilkinson? I think we got to go offline for those grades.
Yeah, me too. You have to do plenty offline. The empty
Yeah.
accounts, I don't know.
Mm-hmm. You can do that.
That's an
Yeah.
offline conversation. You mark mine yet?
I mark by question. So, for example, when I start, if I'm marking question 1, I mark question 1 for all. So I wouldn't know until I'm done. And
Okay.
that way, because it's easy to do that way, and then I maintain my independence until the end. And when I add things up, I'm like, oh God, okay, that's great. What happened there? Who's that? So you're
Okay.
going to go very soon. Today is what, Monday? Very soon.
So you got to send it out via email?
More than likely, I'll be sending them out individually unless the institute says otherwise.
Okay. Crystal, you balance?
Yeah, I balance, but like you said, that's offline because I'm not sure of those journal entries.
Exactly.
But I saw Mr. Wilkinson. I saw where he got that excerpt from in the manual. I was too shocked.
My.
You didn't check the textbooks, obviously. You only didn't check your textbooks.
I know he was coming with it. Yeah, I know he was coming with the stuff from there, but
I thought he was coming with something different though. But
Well,
yeah, I saw the entries. It wasn't as bad, to be honest with you, Mr. Wilkinson. It wasn't that bad, but
It
no,
wasn't that bad, but I didn't study good enough. But it wasn't that bad. I agree with Crystal.
yeah, it really
Uh,
wasn't.
in some instances, I can say I didn't study enough. I could be honest. I think I didn't study. I didn't study too hard. That's the problem.
yeah,
And my
that's,
problem was too, I had that day was a stressful day for me at work. So by the time I got to the exam, I was already mentally exhausted. So my
Yeah.
brain started to shut down.
which is why, it is always suggested that you get a good night's rest, have a good meal, and
I did all of that and still went to work and had a challenging day.
yeah, once you go to
Yeah.
work, then it spoils everything.
Yeah, the
Yeah.
weather was bad too. It was just all types
Yeah,
of.
everything was off.
Yeah, I had a couple persons call in. I had to cover a shift that I didn't want, so it was horrible.
Yeah, that's happened to some strange reason.
At least you kind of put fairness because you left before all of us. So I
And
was
then you
like,
listen,
what?
I wrote everything on the paper that I knew.
Well, the truth of the matter is, for those who committed the most, you'd find it most satisfactory. For those who didn't commit as much as they should, then you would struggle a little. And I hope there wasn't anybody in the room who didn't commit at all, because that's never good. And but from what I can see so far, folks, there's been quite a bit of commitment. Folks have done pretty well, and a whole lot of the questions that I've graded so far, and that's really my objective, to get you to get the fundamentals down pat. I wasn't so much concerned about causing you to pull out every piece of your hair by making it some super duper thing that's beyond your ability to deal with it, even as an introductory kind of student. My goal was that you get through the basics, you go through the process, you and you make it work. From what I can see, that appeared to have happened, and that's really the greatest benefit. Okay, for sure. All right, so I'll see what the numbers finally add up to be, but if it remains consistent, okay, because folks are pretty much on track, especially those who really made a commitment to study. You can tell the difference between those who made a full commitment to study and those who did something else, sort of study. But that's normal. That's how it is. Everybody has different stuff going on, different time frames, different energy levels, and so on. But not bad from what I can see so far. And hopefully you guys can carry that through to the end of the semester and ready yourself for accounting two. You have to do accounting two, whether it's part of your program or not, because that really kind of gives you the other side of the fundamentals and that real solid bookkeeping accounting base, which is useful whether you become an accountant, a banker, a doctor, a gardener, doesn't matter. It gives you enough information for you to function in that capacity. And certainly if somebody's having conversation, you can understand the basics, the fundamentals, and that's really the key. Okay, so keep on checking. Accounting two, of course, is a little more challenging, but it's supposed to be. It's accounting two. All you need to do is up the ante a little bit more, and the benefits will take care of themselves. Okay, for sure. All right, let's see who's with us so we can get started. I know Kashanti is. She jumped off the Titanic before the lifeboats came around. For whatever reason, that happens. Vanessa, are you there? Not yet. By the way, are we in week number 7 or 8? Let's do some more housekeeping. Are we in week number 7 or 8?
I think this week number 80.
Well, we have one. Do we have a second? Don't just agree with her. Check first. She might be wrong. For some reason, everybody believes Joe Biden, and they don't know why, because they don't know anything about Joe Biden. Does that have anything to do with accounting? You better believe it, because he wants a couple of $1 billion, he said, send aid to the Ukraine. Why would he want to do that? Plus, he wants another couple of $1 billion to fight COVID, which nobody's talking about. What part of COVID would he be fighting? But all of a sudden, everybody's so tied up, nobody's thinking, checking while things are going. No second? Nobody else with a calendar in the room?
I say 7. I could be wrong, but I stick by 7.
Well, we started April the 18th. How many weeks is that from April the 18th to now? Anyone?
April 18th, we started. April ain't come yet, sir.
Well, that's what they have on this sheet.
I mean, that's the end date.
Oh, that's the end date. So somebody's looking then. Remember, sometimes we throw things out just to see if you're looking, you know.
I was looking, but if April ain't come yet, it got to be the end, you know.
So you deducted. All right, so when did we begin?
Got to go through the emails.
Really? You guys don't have like information as to when you began? What kind of, this is truly the Titanic for real then?
Did we start on January 17th? I don't know.
Yes, why did you say that?
Because that's when I think we started.
Why? What made you think that?
Because I know it was after the holiday. The holiday was on January 10th. And I know it was the Monday after that, if I'm not mistaken.
Okay, that's a hell of a way to come up with it. All right, so yeah, but sometimes it works. Yeah, so from January 17th to now, how many weeks is that?
That's 8.
8. So we are in week number 8. Please update your files so you don't lose track of where you are.
Yes.
Okay. So we're in week number 8. No, Vanessa's not here yet. Hadith is here. Okay, week number 8.
Yes, sir.
Okay, so now everybody's on the same boat. Clinton,
I'm here.
are you in week number 8 as well?
Hold on, let me check my emails real quick.
He's still checking. That's funny. How does your email help you?
It tells me from which day you send out the financial accounting class.
Okay.
Okay.
Okay, while Clinton is checking, he'll confirm in a moment. Mario, are we in week number 8 now?
We started on January 17th.
Yes, indeed.
Miguel Pratt sent it out to us.
Okay, so we're in week number 8. Mario,
As am I.
you agree with that?
I'm in week 8.
Sorry?
I said I'm in week 8.
Okay, excellent.
How much weeks do we have? 14 or 16?
14.
14.
Yes.
How many-
Daniel.
Good night.
Hi, Daniel. Did you write your examination, Daniel?
Yes, I did.
Excellent. How did you do?
Oh boy. I didn't study hard enough.
Why
So
not?
I don't know. I could have done much better.
I know. Not that I have your grade yet, but when I say I know, I mean I know what you mean.
Yeah. So there are some things I weren't prepared for, like definitions, but I'll probably get it together.
I don't know, but y'all, them short answer questions in the beginning was poison my head right off.
I get them wrong. I probably did better on the application than the questions. I might as well tell you.
I did better on the short answer questions than the actually applications, to be honest.
No, I
man,
did
like,
the reverse.
I feel like we was focusing so much on balancing and this and T account and this and that and Ray.
I
Tell
think
when the short answer questions come, but define this and define that.
Yeah, I didn't
I say,
expect all
whoa.
of those definition questions. I really didn't expect all of that.
I was
said, whoa.
expecting definition questions, but the application part on the back end.
Yeah, everybody have their strengths and weaknesses. That's actually
Well, I mean, and I just didn't. I don't know.
Mr. Wilkinson, I just have a question. How come you didn't put any points on on those questions?
Points, putting in points would help.
I beg your pardon?
Putting in points would help, I mean.
If I see a point where question where 25 points, then versus a question where 2 points, then I know what I gotta answer first.
I see
It
what you
does
mean. Yeah.
help.
Well, some examinations are like that, but just for information, the accounting examinations that I normally do, the reason why I don't put points is because typically how I grade accounting answers is that you generally get 1 point for every correct answer you make.
But what is it out of, Mr. Wilkinson? What is the total, at least, so that we'll know the passing? I mean, what is the total amount it's out of if we do not
Right,
know?
and
What is
and what
the
the passing
total and
mark
what
is
is the
too.
passing mark?
Mhm.
My. It will all be forthcoming very shortly. Not to worry. Sometimes, depending on the examination that I set, because I vary it from time to time. Let's say, for example, I give you a question that has a balance sheet, income statement, and an equity statement. Everything you do right, I don't look at the balance sheet and if the balance is correct, just give you full points for everything. Or if the balances are wrong, say, well, that whole question is wrong. I don't do it that way. What I do is everything you do correctly in the balance sheet, you get a point. Then I add everything up. So it can be somewhere out of 80 something or 120 altogether, depending on the number of questions and the number of ticks and correct answers that I'm looking for. So the key is to just keep writing correct answers and the rest usually takes care of itself.
Like I couldn't even bother to answer those short answers first because that was gonna waste up all my time. I would have been racking my brains trying to
Why?
figure because I wasn't prepared for all. But like one question had about 4 or 5 parts. So honestly, I wasn't prepared for that.
That kind of question.
Right. I was prepared for maybe one question per question, not 4 or 5 parts per question.
Well,
So
sometimes what examiners do is they, for example, if a question has 3 parts, they might put all 3 in one question or make it 3 questions, 1, 2, 3. At the end of the day, it's the same questions.
right.
But for some
Okay.
reason, when you put it in one question, students get a little like, really?
Yeah, I get that, right? So, but if I see a question like worth with 4 or 5 parts, only worth like 2, 3 points, I definitely am wasting my time trying to do that.
Oh,
You understand what I'm saying? Like
Yeah, I
I'm-
get what you're saying, Denise.
it was kind of it threw me off a bit because I used to seeing the points and then I know what I have to attempt and what I have to, but I just was wondering how come
where do you normally see questions with points?
every exam I sit have questions and at the end of each question it tells you how much points that one particular question is worth.
You including accounting exams that you've done, or this your first accounting
Well,
exam?
this is my first accounting course, so
Okay.
you didn't have any points, so now I'm realizing accounts exams are different. So
Yeah, accounting exams tend to be a little different in terms of putting points at the end, because again, you probably may not have been aware, but usually every single, for example, if you have a question with 3 parts, every part of it that you answer correctly, you'll get a point. That's really how I grade my papers. See my point? For example, number 1 says, what is the difference between financial accounting and managerial accounting?
Mhm.
How many points do you think you'll get for that? Based on what I say.
2.
2, yeah. And then the second part of that same question is, what is the accounting equation? Anybody remembers what that is? What is the accounting equation anyway?
Assets equals liability plus owner's equity.
Yeah, if you wrote that simple thing, well,
Mhm.
when I say simple, that doesn't mean it's not important.
So that's
is
1 point.
No. Assets equals liability plus
That's
equity.
3 points.
So that's 3 points. See, that's what I'm saying. So that's only 2 parts, and that's already 5 points. Okay,
Yeah.
so was okay, never mind. All right.
Yeah, I understand what you're saying, Denise, but here's what happens in my accounting exam. My focus is not on the number of points. I just want you to focus on getting the correct answers. The numbers will take care of themselves.
Okay.
That's really how at least my accounting exams are done. Okay, so
Okay.
when you're doing your final exam next time, just answer all the questions correctly, and the rest will take care of themselves.
Impossible, but okay.
I know.
Especially for this accounts class.
Yeah, but that's okay.
Denise, log off.
Accounting is
Mr.
always
Wilkinson,
Hi.
you
Hold on,
do
Ma.
an
What are you doing?
average then, like for example, you stated something to say, well, let's just hypothetically say we get, someone gets 100, over 100 points, 120, by
Yeah.
you keep adding these points. I'm saying that's just one example on the definitions, but I understand Denise's point in that other definitions had sub questions that perhaps can get you into 8 to 10 points.
Thank you.
So I
That's
guess
what
my
I'm
question
saying.
is too,
Yes.
what is your point? What is your maximum number of points that will allow us then to say, or are you doing an average? Because we could keep going. Are you going to say the highest person in the class, that is the average?
No.
So what is
I
your
know,
cutoff?
for example, when I go through my examination, I was trying to see if I could find an old one that might help to explain. When I go through an examination, I usually know how many points in total I'm working with before I start grading. So I'll go through the definitions and allocate my points. Question 1, allocate my points for all the questions, including the problems, etc. And so I'll add them up. And then I come up with, this is an arbitrary number, 130 points total for this examination. Now, if a student, what is half of 130? Anyone?
65.
Yeah, if you get 65 altogether, then what would be your grade?
50%.
Yeah. If you get 100 points, what would be your grade?
80.
I don't know, somebody with a calculator?
Yeah, 100 out of 120, right?
130.
Oh, out of 130? No, that ain't 80. Probably 70 something.
And that's basically how it works. So the key is just keep getting correct answers. Whatever you get incorrect, nobody's going to get everything correct typically. The key is to maximize the numbers of answers you answer correctly, and then the final result will come out of the total number of points allocated.
Okay.
Okay, so come final examination, it's going to be similar to the midterm. So you get a hint already. You're going to have a couple of definitions, a couple of short answers, and a couple of problems.
Did y'all add that 6,000? And did y'all record that?
What is it?
I had trouble
No,
with-
not a transaction.
I didn't add that either. Boy, must he balance then. God is good.
Yeah,
What
some
y'all talking
people.
about now? What's 6,000? Because I ain't reached it. What y'all talking about?
What's 6,000?
That was in the balance sheet, Crystal.
I made a decent catch up. Yeah, that was a balance sheet thing.
That was the journal entry to do the balance. If you do that, your trial balance, everything off if you add that, because they had them questions tied in. Oh man, I was right there trying to figure out if I should add that 6,000, and I say, hold on, over a period of this ain't adding in. No.
Well, if you were having that dilemma, then you were like every other student of accounting. That's always what we do in the middle of an examination. Like, what is this? How does this fit in? Should I add this in? Is it part of this transaction? That's just part of the, yeah.
And it's always something in there to throw you off. So I figured that was it.
Just like a medical.
Oh, that's when they made the agreement for something for 6,000. Oh no, that was a transaction, right?
Okay. Yeah, that's what we're saying.
Okay, so I catch up now. I caught up.
6,000. Okay. Yeah, so there you go. But from what I can see, folks have been managing this this crazy stuff pretty well for first-time students. A lot of first-time students just don't get it until the semester is almost over, and sometimes even afterwards they're like, man, I still don't get it. And they don't get it until they do accounting too. And so, you know, from what I can see, a lot of you guys have grasped a lot of the fundamentals quickly in just a couple of weeks. Okay, so actually you should be kind of applauding yourself, because some other students it's a nightmare. Okay, for sure.
Well, because then I have one more question with this,
Yes.
okay, so that I can know going forward too. When you say open T accounts, right? Do
Right.
you also require us to prepare the journal entries for that, or would the T account suffice? Like, do you require, you know, how we did it before?
Well, Crystal, that's a good question. And here's the answer. Because part of the examination is technique, isn't it? You
Yeah.
could have all the answers studied, and if you interpret the question incorrectly or take the wrong route in answering it, you could still not maximize your points. So here's why that's a good question. If the question says that you should prepare journal entries before posting to T accounts, then you should do that. If the question says the following transactions occurred during the month of May, post the transactions to the T accounts, that does not ask you to do journal entries, correct?
Yeah.
Thank God. Okay.
So
Yeah, so we didn't have to do it.
But here's the catch. Some students do the posting part of the question better if they do journal entries first, even
I
though the question does
agree.
not require you to do it.
I
So
agree
if you're one of
completely.
those students, then you do the journal entries first quickly, like scribble it out first, so you could look at it to see how to post it correctly to the T accounts.
No, I
Other
like the
students-
T accounts.
Yeah,
I
other
agree,
students
Ms.
can just take the transaction and post it. For whatever reason, they can do that. And then
Yeah.
other students are like, man, that's gonna mix me up. I need my journal entries first. And the truth of the matter is, in practice, we really should always do journal entries before we post. All right. Now, sometimes you might get an exam question that like swing you a little bit, like go from transaction to posting. But in the real world, you should never go from transaction to posting. You should always go from transaction to journal entry to posting. Always. No matter what. Okay. So
Yeah.
yeah, even if the question doesn't ask you to do a journal entry, but you're comfortable with doing it before you start posting, that's the way to go. Okay. Now you may not get credit directly for the journal entries you did because I was not part of the question, but the credit will come because the journal entries will help you post correctly. And I think we've all figured out by now that if we post incorrectly, dog eat our lunch when it comes to financial statements, correct?
Yep.
Yeah.
They teach it at lunch too.
And
'Cause
that
I-
is
yeah,
the
I
na- yeah,
realize that.
and that is the nature of accounting in the real world. That's why the person who is analyzing transactions in your accounts department must be properly trained and know what they're doing so that they know clearly what to debit and what to credit always. Because if they don't understand that process well, there's a whole lot of garbage that will be going into the computers. And a whole lot of garbage will therefore come out in the form of financial statements. Okay, absolutely. Okay. So that's a good question, actually. All right. I hope that helps somebody else. That was a good question. Okay, Danielle. So this time, Danielle, you'll be ready, correct?
Correct.
Okay, way to go. Okay, yeah, Crystal is here. We're in week number 8 still.
Yes, week 8.
Yeah. Man, time passes quickly. Blaine.
Good night.
Hi, Blaine. How are you?
I'm good.
Are you in week number 8 as well?
Yes, sir.
Fantastic. Just making sure everybody's on the same page. Does accounting sting sometimes? Of course, I get other subjects. So trying to do a biology exam in medical school for your final exam, that's a nightmare. You pull out your hair, Chris card, all kind of stuff, because it's a mess. And so accounting for new students, like you're doing it for the first time, it's not necessarily going to be a piece of cake all the way through. You're gonna have days and nights of misery, sort of. So don't worry about it. Comes with the territory. Okay. I know Denise is here. Way to go. Where is Hervinique? Is she here? Hervinique, are you here?
I'm here.
Oh, there you are. So how was the test, Hervinique?
Huh. Like you said, it's misery, some misery, and takes time. So the first time is, yeah,
It wasn't all misery, right?
it was okay.
Okay, yeah. If you did any preparation at all, like you did all the homework and studied the meaning of things and was reading consistently, and if you did all of those things, it's hard not to get through to some degree. Now, if you fell down in any one of those areas, any number of those areas, like because you were busy, got tired of it, worn out, then you're not going to really maximize the outcome. That's just kind of the nature of things, especially when it comes to the academic world. Okay. All right. But the key is keep on keeping on. That's the point. Don't throw your hands up and say the hell with it. All right, Chanel. Okay. So, of course, if you think of anything that you would like to, anybody have anything else peculiar that came up in the test, like that, like, what was that? Because folks answer the question in the accounting equation pretty easily. I'm sure, and I hope that everybody knows the difference now between managerial and financial accounting, don't we? Do we? I hope so. That's at the very beginning of the beginning. And all that good stuff. And I saw some great financial statements. So not everybody's in the dark. Folks did some good stuff, okay? By all means. And so, yeah, keep on keeping on. What are the three forms of business organization? Anybody?
That is what I would like to know.
You gotta be kidding me. Anybody? Somebody help Mario.
Unless that's the finance and the operating and
No,
I know.
no, somebody help Mario. It was writing your text sitting down quietly. I think maybe in the first chapter. Anybody knows the three basic forms of business in the Bahamas and around the world always?
You mean the sole, the types of business you said?
Yeah,
Or
That's like
sole
the corporation.
proprietorship, partnership and corporation?
yes, three easy points.
Oh, okay.
Yeah. 1, 2, 3.
What was the question?
What are the three forms of business organizations?
Oh,
Yeah. The third part of question, you know what was interesting? I kind of gave the answer for the third part of question 1. If you knew the second part, then you get the third part. For example, the second part of question 1 was, what is the accounting equation? Somebody just blurted that out earlier. No problem. The third part of question 1 was, describe the three elements of the accounting equation. What are the three elements, anyone?
Assets,
Assets,
liabilities, and
liabilities, bonus equity.
Yeah, see, the examiners sometimes do things just to see if you're thinking rather than just regurgitating. So if you got the second one right, then you had 3 more points sitting in the third part of the question, just like that, waiting to be had.
anybody got the three of those, right?
I hope in the question 1,
Yeah.
folks did well up to the first 2 parts, but for some reason, other students didn't see like the third part as part of the second part, like the word elements or something threw them off.
Yeah.
Okay, be careful with stuff like that. Examiners use words to see if you understand what you're doing. In other words, sometimes an examiner, not only in accounting, an examiner might use the word 6, and then other times they might use half a dozen. See? just to see if you're thinking about stuff. And sometimes vocabulary is used in a way just to see if the students are thinking about what it is they're doing, or they have another perspective, not necessarily to say gotcha. Okay. What is the meaning of gap, anyone?
Generally
Mm.
accepted accounting principles.
So, like, you guys know this stuff. You didn't know which questions I was going to ask just now earlier, but you
No.
still remember it. Oh, wow.
Mr. Wilkinson, I could say this for me. I felt like I wouldn't say I was tricked, but
You-
you ain't gonna trick me in the finals, because now I see how your exams are. I
yeah,
didn't expect as much definition questions that I did
right.
that we got, but you ain't gonna trick me in the finals. I didn't see how you go, so okay.
And
Let's
yeah,
do it.
your point is well taken.
Yeah,
And,
I'm ready for it.
that's the whole idea.
It's
Because
psych.
my final
Ready for it.
exam format, and I won't trick any of you by changing the format. It's going
Yeah.
to be the same format, because I'm not interested in trying to swing you. I'm just interested in you making commitment to what you need to do in order to get through. And what Denise is saying, try it again.
Honestly,
You see,
I
okay?
get ready.
And
I
guess what,
ready.
Denise? I am going to try it again.
I
to
could
see
be ready.
exactly what you come up with. Very same format.
That's
Okay.
cool.
The only thing that will
That's
be
cool.
different are the chapters, but the format is going to be the same.
That's
Okay.
cool.
So yeah, but a lot of this stuff you guys remember. Okay. What is the statement of cash flow? Anybody?
The ins and the cash, the cash in and out of the organization.
Yeah.
Shows
Why
the
is that? Yeah, money coming in, money going out. Why is that important?
profitability and liquidity.
There you go.
Why is it important? Why is cash flow important?
Well, as show you if your business could pay all your debt,
At the end of year when they become due.
if
Not
they
only
could
the debt.
maintain, if they could stay open.
Yeah, pay your debts, pay your staff, pay your utilities, and pay everything else you need to pay. Otherwise, you'll be out of business. See, you guys, I heard somebody say liquidity and profitability. Like, where did those words come from spilling out of somewhere? They don't just happen automatically. You had to have studied or remembered something.
Yeah.
Becoming
Yeah.
accountants.
What are the two major goals of all businesses? Liquidity and
Profitability and liquidity.
profitability. Yes. And
Yeah,
liquidity
yeah, damn
means
right.
what? What does liquidity mean?
Business being able to at least pay all of its bills, all of its debts.
Yeah, having enough money to pay your bills when they come due. Just like
Yeah.
people, we try to be liquid at the end of the month. Like when we get our salary, we hope it's enough to cover our bills. And if it isn't, dog eat our lunch, we have to borrow, as we say in the Bahamas. So cover the shortfall. But the point is, being liquid is having enough money to cover your responsibilities, by all means. And what makes the company profitable? What's the formula for profit? Anybody remembers?
Revenues minus expenses is a profit, net profit.
Yes, yes, yes. It's not difficult, but you do have to commit in order to get the fundamentals. And once you get those fundamentals, you're like, oh man, this is smooth sailing. Well, not necessarily, but life gets easier. Okay? What do we mean by double entry in accounting?
For every
Credit and
debit, there's a
debit.
credit.
At
Yeah,
least
for
Yeah.
every debit.
And the credit, and it must be equal.
Yeah, always. Every journal entry has to have a debit and a credit, and the amounts must be the same. Very fundamentals, like brushing your teeth in accounting. And by the way, I'm getting these questions of your exam, and you didn't have time to go back and study. That means you've already studied and applied yourself. And that's the whole point. A lot of times you feel you're not going anywhere, but you are. That's how subtle academia is. If you come to class and talk and read and do homework and study and read and do homework and practice and talk, strange things happen. All right. What is the trial balance? Anyone?
It's the closing balance of all of the T accounts, counting period, all of the accounts. The trial balance records all the closing balance on each of those accounts.
Well, not necessarily closing balance. What's
Well,
unique?
not closing. Yeah.
What is unique about the trial balance? Who remembers? It's not difficult, you just have to remember. Remember the trial balance has all the debit balances on the what side?
On the left.
And all the credit balances on the,
Right.
and when we add them up, they should?
Balance.
Yes. And if they don't balance, what does it mean?
It means that you have something off. Maybe you got to go back to the T accounts.
And what do
Check
we
to
call
see.
all the T accounts together? There's a name. I know you like T accounts, but we have a better name. What is it?
General ledger.
The general ledger. Okay?
Yeah.
Yeah. Some folks like T accounts because they're comfortable with T accounts. But the real formal word for T accounts are the general ledger accounts. Okay? Okay, so you guys are not as bad as you think. For sure. What is a permanent account? Which financial statement do we find permanent accounts in?
The first
Permanent
one.
Which one?
permanent account is a cash account.
That's an example of a
The,
permanent account. Where do we,
what
which financial statement do we
The
find?
balance sheet. The
A
balance sheet.
balance sheet.
that's
Why,
the first
why are
one.
they permanent?
Because they don't close. They
They
run
don't close. Yes.
they have a current the amount go over in another accounting period. Total.
Yes.
I don't know.
And what about the income statement accounts? What do we call them?
A temporary accounts.
Why?
Because they close at the end of every period. They balance them to zero. Well,
Yes.
they
What is the standard accounting period in accounting?
1 year.
Man, you guys are griping a little, but you guys are on your game. No matter what score you get. See, that's the next thing. See, that's the next thing. You might be like, I want 100% or whatever, but clearly there's no way you could answer those questions unless you've been to class, you've studied, and you've read. No way under the sun. How do I know? I just know. Okay, so good stuff. Whatever the hell the final grade is, what I'm hearing tonight is very pleasing to me because it means that you guys have made a commitment one way or the other. And that's really the most important thing. The rest will take care of itself. Study harder, study longer, study in a group, whatever else you need to do. See what Denise said? Not try give me an exam like that again. And guess what? I'm going to give her one exactly. Not exactly, but
No, I
same
just see your style now. I'm more comfortable because it was a guessing game at first for me. So
yeah, which is usually the case when you're first starting out anything, correct? Absolutely. All right. That's not unusual in anything. So now that you get a feel, kind of ready to go and says, okay, I get it. All right, chapter 6. Chapter 6. Can you guys see my screen?
yes, sir.
Okay. Yeah, for those of you who want to follow, feel free to do it. Again, of course, some of you have a different text, but at the end of the day, we're still talking the same language. Notice at the left-hand side of this chapter, which of course is the operating cycle. The operating cycle is going from the transaction all the way through to the preparation of financial statements and closing the financial statements at the end of the accounting period. That's what we mean by the operating cycle. And the operating cycle is usually, for students who've just been doing accounting for a couple of weeks, whether you guys realize it or not, you've done pretty well. Working students, first-time students, you're already talking the language of accounting, okay? Which a lot of students don't always do so well for whatever reason, okay? So while you're stressing, pat yourselves on the back a little bit and keep on trucking. All right. What is a merchandising operation, anyone? Merchandising, what does that mean? Ever heard it?
It sounds like it has something to do with merchants, like um um merchandising, like creating products or selling products, maybe in bulk or mass.
Okay. Who said that?
Denise,
Yes. Who's me again?
Denise.
Yes, Denise, you're absolutely right. Merchandising is really the selling of goods. When you go into Kelly's, that's merchandising. When you go into any store that's selling goods, that is called merchandising. When you go into Wendy's to buy great food from Wendy's, that is merchandising, the selling of goods. Okay? And usually the selling of goods that have already been manufactured, made already. All right. If you look at the left-hand side of my page, you'll see those same old statements again. And the writers put this there. I hope it's in the other textbook as well, because it's a great reminder to students as they go from chapter to chapter to remind themselves of what are the components of the income statement. See, 3 components. Can you see them? The 3 components of the income statement. Everybody sees that?
Yes, we can.
Okay. If you're kind of bored with it, that's good, because unless you're bored with it, that means you still don't know enough about it, for sure. All right, so being bored with something, especially in academia, is a good thing. That means you've learned it sufficiently, you're comfortable with what it means. Anytime you're not bored and not familiar, you should panic, because that means you don't know it well enough, and that is a problem in academia. Okay. Again, the statement of owner's equity starts with the beginning investment balance plus any income minus any withdrawals equals the ending investment account balance. Remember, the owner's equity section of the balance sheet is the investment section by the owner, which you put into the business and whatever profits you make. What do withdrawals do to income, anyone?
Decrease it.
Yeah, it decreases it. So if you open a business and you set to make profits of $10,000, but you decide you're going to go to Israel with your church and you take $6,000 of your business, what does that do to your profit of 10,000?
Decreases it.
By how much? By whatever you withdraw. In this case, it's the $6,000 to go to Israel, the Holy Land. Okay? A lot of people do that. Say, this is my business. I'll take any money I want out of it. And I don't want any accountant telling me what to do either. Before I fire you and find somebody who will shut up and just let me do what I want to do. Some people are like that with their business until all hell breaks loose. They keep taking money out, and then soon they don't have enough money to pay their bills, and so they're running around for bank overdraft, and the bank says you're an irresponsible entrepreneur. We can't give you an overdraft because you're not going to pay us back either. And if you're not careful, eventually you will be out of that business like so many people here and around the world. Okay? What are the components or elements of the balance sheet again? Anyone?
It's assets, liabilities, and owner's equity.
Absolutely. Remember, the more exhausted you are with it, that means the more familiar you are. And that's what you want to be, familiar. For sure. Okay. All right. For example, there's certain things in life you don't want to be familiar with, that is a serial killer. But certainly if you're studying stuff, you want to be familiar with what you're studying. Okay. Weird example, but it's true. And then of course, the final statement is the statement of cash flows, which is made up of 3 fundamental types of activities, which we'll see later. All right, the operating activities, which is the buying and selling from day to day. The investing activities, when the company invests money in order to get a return on the investment. And then financing, which is the borrowing side of business. All 3 of those things result in money coming in and money going out. And at the end of the statement of cash flows, we have a new cash balance to see, after spending and receiving all year, how much do we have left in the bank account? And cash flow statement will show us what cash we have left. Because a lot of companies are operating, but they are cash strapped. They don't have any liquidity. Okay? Just like some people have so many bills to pay. If they get paid $1,500 a month, their bills are $1,400 for some reason, including loans and other stuff. So they only have $100 left. So if something happens, like they get 2 flat tires in a row, that's a big problem. Or the engine goes down and they say that'll be $300. Oh my God. Let me call my sister, my mommy, or whatever, my daddy or something. Okay? That's what cash flow is all about. Okay. Any question on the cash flow statement, or you basically get the gist of it at the moment? You'll see some other things about cash flow statement later on. In practice, it's not that simple. I just simplified it for the moment so you can get warmed up. So the chapter opens with a definition of merchandising business, buying and selling of goods. Usually we call it merchandising inventory. I hope everybody in this class has heard the word inventory before. Otherwise, inventory is simply those goods that we sell in our business. And so the operating cycle then is that buying and selling that takes place all through the year for an entire year. And then the financial year ends at the end of the year. We close the books and roll the balance sheet over to the next financial period. And so in this chapter, we're going to see the kind of accounting transactions that take place in a merchandising enterprise where we're actually selling goods. And it's to see exactly what kinds of entries we make and what unique things happens in accounting for those merchandising companies like Kelly's and such. All right. Notice the operating cycle has 4 key things happening. Can anybody see what those 4 key things are? Number 1. These are very important to understanding the operating cycle. What's the first step in the cycle?
Purchase of merchandise in inventory for cash or on credit.
Yeah, for cash or on credit. Very important. One or the other. Number 2.
Payment for purchases made on credit.
Yeah. If you get stuff on credit, you borrow money or you get stuff on credit, you have to be prepared to pay it back. Some people like to borrow and get credit, but they don't like to pay stuff back. Your very friend or family member will borrow some money from you, and when it's time to pay back, they don't want to part with their money, even though it's not their money. They owe it to you. Many people will keep stenching from 1 week and 1 month and forever if you let them. Anybody had a situation where they loaned money and never got it back?
Definitely.
Definitely. No doubt. If I had the amount of money that I allowed credit for in my lifetime, I would be able to retire and have a martini and not hit another day's lack of work. That's how much money people did not pay. And they didn't lose any sleep either. They just disappeared or
Get mad at you.
yeah, get mad at you. You got it. Avoid you. You got it. Avoid you. All kinds of weird stuff. Don't invite you to Christmas dinner anymore. Whatever it is, depending on the relationship. Just so that they don't have to pay you the lousy, stinking money that they promised to pay you with all their heart, right? I swear. When I
Like you
get my
do them something.
yes, I am going to pay you your $300. And then months and months pass, and you say, like, you get the nerve now because you're afraid to ask for your own money. Jennifer, what about that 300? Then Jennifer starts getting mean. Like, you asking me about that stinking $300? I's your sister. What's gonna happen if something happen and you who gonna help you? The people come up with all kinds of stuff not to pay. You try to get this money, I can leave you in the road, Joan. Stinking 300. I can pay you next week. And then what happens next week? Nothing. All right. So I say all that to say the step 2 in the cycle, it's not as simple as you think. making payments for purchases on credit. It could be a nightmare if somebody decides or some company decides they're not going to pay. Okay? Imagine if you own a business and you sell some goods on credit and they promise to pay before the end of the month and you're waiting for that money to pay your staff and pay BEC. See? And then as you get closer to the end of the month, you're calling and they said, soon, tomorrow, whatever. It doesn't happen. And then suddenly the month end comes and you don't have to put the money because you were relying on that. And then everybody's mad at you and you can't find Jerry Roca in town. All right.
So quick question.
Yes.
In that case, is that when like the owners step in and like take money out of their pocket, or that's when like the cash is just depleted more to make those payments?
You mean the payments for on credit?
No, I mean like the stuff you say just now is the same thing. Like a company made sales on credit and like they're waiting for the money back to pay their staff and to pay their utility bill, whatever, woo woo woo. Like
Oh, yeah,
in the
yeah.
instance.
Yeah, that's a very serious thing.
So that's what I was asking. So like, in that case, is that when like the owners have to take money out of their pocket?
If they
Or
have
they
any in
just
their pocket, if you have money in your
yeah.
pocket, that is your personal money, not company money, yes, you'll have to take it out. If you don't have any personal money, then you have to find somebody who will lend it to you, if not a bank, who will give you a temporary overdraft to pay your bills for that month.
My gosh.
Okay? So it can become something of a nightmare if you give credit and people don't pay. And people have this look like, why the hell are you running me down for money? What's your problem? Problem is simple. I need the money to pay my bills as well. See my point?
So I take it that's why most places if you like no cash refunds, just all credit.
Well, they say no credit, only cash. Okay? Like we don't do credit here. You can get credit on your 90th birthday. See stuff like that. That means don't even think about it. Okay? Financial institutions give credit because that's how they make money, but they do it professionally. But people in business who don't have the kind of money and capital to be giving credit and people don't pay back in time for them to pay their bills, stay away from that stuff. Unless you have a bunch of money sitting around to cover your bills and people don't pay, don't mess with that credit thing. Giving credit, you open your new business like 6 months into your business, and then everybody wants credit. See, all the family members, friends, everybody from the church, the senior choir, whatever it is, everybody wants credit. And then all of a sudden, nobody's paying you back. And if you don't have enough money stashed away somewhere to cover, dog eat your lunch. Many people suffer from that all the time as we speak. Okay? And all of this stuff occurs in the operating cycle. We have individual operating cycles. Every month we get paid and we have expenses to pay. If we don't manage that properly, dog eat our lunch. We have to borrow money from someone to cover the rest. Okay, for sure. Just like a business. Because running our home is like a business anyway. And some of the principles apply. And we have operating cycles every month too, just like businesses. All right, step number 3. Is there a step number 3?
Yes, there is.
Sale of merchandise inventory for cash or on credit.
Okay, so you purchase it for cash or credit. Now we're selling it for cash or credit. I think we're all clear on that cash and credit thing. When to do it and when not to do it. Don't mess with credit unless you can afford to do it. In business or personally. If somebody needs money, if somebody needs a personal loan, like $700, and that's like your rent or your mortgage or something payment, and you don't have any money to cover that, don't lend it. Because if they don't pay you back, what are you going to pay with? Then you have to go and borrow and hope somebody loans you the 700 while you wait for that person who promised you faithfully. God knows it. I'll pay. You bring God in it even. God knows it. Just lend me it. And then you tell them, now I'm lending you this. This is my mortgage payment. Don't worry. You think I can let people and then put you in the road? I gonna pay you? No. Some people do, and some people don't. It's up to the lender to decide which risks to take. And companies have the same thing. When you're selling merchandise on credit, you better know who you're giving credit to. You cannot give credit to any Tom, Dick, or Harry. You have to be very selective. Okay? Notice when you go to the gas station, they say no credit. One or two gas stations are left in the Bahamas that give credit to very selective people like Brent Simonette, Frankie Wilson, people with money and like that, who they believe will pay them. But regular people, when you pull up, money or nothing. And the reason why gas stations do that is because in the old days, they used to give credit to a whole lot of people, regular people. The only problem is regular people wouldn't pay, and then they stopped going where? To that flicking gas station. See my point? And now you have to run them down to get the money. And then suddenly you cannot collect enough money in order to pay for your gas shipment when it comes in at the end of the week or whatever. And some gas stations have actually gone into business because of excessive credit and cannot get the money back, and therefore did not have the liquidity to cover their gas shipments and important bills like salaries and utilities. Okay. All right. Point is, these are all part of the operating cycle discussion. And then, of course, fourth but not least, okay, collection of what?
Cash,
From where?
credit sales.
Yeah, that's the biggest challenge of all. Of all the four, that number four, that will give you the greatest nightmare ever. And if your luck is really bad, you may end up out of business if you cannot get that done properly. For sure. Wow. Some food for thought. All right. So if you look at this little diagram, you can see it's just a diagram we were just talking about, the flow of cash around the system in an operating cycle. You're making purchases to buy inventory, you're selling on account or for cash. If you sell on account, you have to find a way to collect it. If you sell for cash, thank God it's in the bank. And then whatever cash you have, you get to pay your bills, accounts payable, and then you start buying stuff all over again. So the cycle is a continuous one, and it never ends until you end up out of business, God forbid. Nobody wants to hear that. All right, then we have a nice little example. I don't know if they have the Target and Costco example in your textbook, but anybody looked at that? Do you have that in your text? The Target and Costco example? No? Well, basically, just by looking at it, what do you think it's trying to tell us? What do you think it's trying to tell us?
I can't answer it.
Well, for example, the number of days of inventory on hand or in the warehouse, Target has how many days?
56,
56, and Costco?
31.
31. So that means Costco gets the stuff out what? Far sooner?
I guess.
Yeah. Why would Costco get it out sooner? Do they sell the same types of products?
No, but also because they have less days for the stuff to stay in the warehouse.
Yeah, well, it could be a couple of reasons why, depending on the products that Target sells versus Costco. I'm assuming this is Costco, the food chain, is it? Do you have a Costco in the Bahamas?
Why I just bought. I don't know.
I doubt it.
Ladies, we don't know about a Costco, but we have a type of Costco down in the mall. What is that called?
Solomon, that's right.
Yeah, cost right is something like Costco. Okay, so obviously the merchandise in Costco is moving faster than Target. Okay, the receivables account for Target is 34 days. Costco, 4 days. Clearly, they're moving different types of merchandise. Costco takes 59 days to pay back. Sorry, Target, Costco 31. And the financing period for Target is obviously 27 more days than Costco. If you had to vote for the most successful of the two in terms of these activities, which one would you choose?
I'd say Costco. They have a faster turnover.
Of course, they have a faster turnover by all means. Okay. Target will get there screaming and shouting, but Costco, obviously, things don't linger, whatever the case might be. Maybe it's the products they sell. Okay? Because remember, when you go to Target, Target carries a certain product line, and there may not be things that are demanded every single day by a certain number of people. If Costco is a merchandising company that sells food stuff and that kind of stuff, people are always buying those things. So the turnover is going to be far more rapid. And again, these are all discussions about things that take place in the operating cycle. Okay, for sure. Now, the big thing for merchandising companies, probably the biggest expense ever for them is merchandising inventory, known in short as inventory. Whenever you hear the word inventory, what we really mean is merchandising inventory. But we grow tired of saying that whole long word. So we just say inventory. Inventory methods have inventory has two methods, which we'll learn later on of calculation. One is called anyone knows? This is the first method for inventory costing.
Perpetually.
Perpetual, yes. And the other one?
Periodic.
Periodic. Get used to those two words. Nice test question too, Denise.
Gotcha.
You see where I'm going with this?
I do.
Remember, my objective is not to say gotcha. My objective is for you to learn the important concepts. There you go. So, how does the perpetual system work? When you go into a store and you buy a product, whenever that product is updated automatically in the system electronically, we say that that is a perpetual inventory system. So there's no need to do inventory counts at the end of the month or year. Okay. Does that mean you don't check to see what is supposed to be there is there? Of course you check. But technically, perpetual means that as you sell the inventory, it comes off the inventory list. As you buy inventory, you add it onto the inventory list. There's no stock taking at the end of the accounting period. Perpetual does not work that way. You just keep selling, selling, selling. You don't update the inventory. And then at the end of the year, you take stock. Anybody in this room ever took stock?
Yes, sir.
Yeah. It's a painful, long, tedious process sometimes. But the reason why you're taking stock is so that you can see how much inventory is left in the company at the end of the operating cycle, which is usually 1 year. Okay? So if you were wondering why the heck you were taking stock and nobody told you, that was why. Because at the end of the accounting year cycle, accountants need to know what inventory is left. And the only way to know under a periodic system is to count. Under perpetual, you just go to the ledger and it says 300 units left. And we hope that's true. May not always be true because people steal stuff, things get lost, things get broken. Yeah. But technically, that's how it works. Okay. Periodic systems, you don't have any updating. You just sell, 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 buy, buy, buy. And then you take stock at the end of the period. Okay. And you will see very shortly why stock taking is important. You're not just there wasting time. Okay. Keep that in mind. Foreign transactions, I hope you guys know what that means, foreign exchange transaction. Has anybody in this room not purchased foreign currency before? Okay,
We mean like purchase.
Purchase foreign currency?
Yeah.
Okay, somebody jump in, say something. He has a question. What do we mean by purchasing foreign currency?
US or Canadian from the bank.
Yeah, let's say you're going to Canada. Hey, yay, I'm trying to go to Canada next month to see my baby after 3 years. Okay, so I'll be purchasing, and I can't wait to see him. Where the hell here's what happened. We took him to university in Toronto in 2019, just before what?
COVID.
COVID.
Yeah, nobody knew that there was going to be COVID. So here we are in 2019, taking him to get started in summer of 2019. University, yeah, driving up and down, looking, checking out the university, buying stuff, getting started, the usual stuff. And then after the first semester, he was supposed to come home. Instead, COVID struck. So he couldn't come and we couldn't go. And so now here we are after almost 3 years, getting ready to finally be able to go over and give him a big hug. Okay, just thought I'd throw that in there for the foreign exchange thing. So yeah, what I'll be doing is buying foreign exchange. I'll be taking my Bahamian dollars and converting them to Canadian dollars, so that when I get to Canada, I can have Canadian dollars instead of Bahamian dollars. If you're traveling to Japan, you will convert from Bahamian dollars to yen, whatever. If you're traveling to the UK, to pounds, that's how foreign currency works. And so in business, if you're doing business internationally and you're purchasing stuff from the UK, you can't pay in Bahamian dollars, or so to speak. So you have to convert them to UK dollars or pounds, or whatever currency it is that you're dealing with in a particular country outside of your own. That's how foreign currency transactions work. Okay? And so in accounting, if we are preparing financial statements or doing business or paying a bill abroad, we have to purchase the foreign currency for that particular country, okay, in order to pay for that particular bill. That's why it's important to be familiar with foreign currency transactions. But Bahamians engage in foreign currency transactions all the time because we're always flying to Miami, even, or Fort Lauderdale or somewhere. And every time we go, we have to convert our money from B dollars to US dollars, because they wouldn't take
Like
B dollars.
let's say we're moving like cashless though. Like don't hear like say let's say for instance you walk in the store, if you buy a plane ticket to go, right? If you buy a USD, it does the conversions for us. So like in that sense, are we I know it's still like current currency exchange. But I
Right.
think what you're talking about is like when you're like going over there with cash.
Okay, and your
In a
question?
sense, this is what I'm saying. You don't have to like quote unquote purchase currency when you're making cashless transactions, whether it's in a business, whether it's personal, whatever it may be. Because like on let's say the business is buying something online from China or Europe or whatever it may be.
Right.
Isn't like the payment portal they use going to automatically do the conversions for them?
Yeah, it will automatically convert. So
Still
But in that
charge.
sense,
yeah, so you go on with your debit card, like, yeah, I'm buying something out of Australia. What's gonna happen is when you process that card and purchase the Australian product, when that gets over to the other side, it's going to credit an Australian dollars and debit you, and then make the conversion and debit you for whatever the conversion amount is. Automatically.
yes. But I guess you still need to like know. You probably still need to know how much. You
Yes,
would
you
still
do.
need to know the conversion exchange thing just to make sure you have enough payment money to
Absolutely,
do.
absolutely.
Okay.
You got the point. Just like computers, computers are smart and they're consistent and they don't get moody like people, but they're pretty dumb other than that. They only can do what we tell them to do. The only thing that can come out is what we put in. So we put in garbage, garbage will come out. We put in good stuff will come out. They just do it faster and more consistently. And they don't get up moody on it the next day like, I'm in a bad mood. I'm not calculating a bloody thing. That's the advantage they have. But other than that, we still have to know how to do things properly so we can put the correct thing in the computer. Same thing with foreign currency transactions. You still need to know what the currency rates are, how they work, and how the conversions work, and why they're important, and how to time when to purchase a foreign currency transaction, because sometimes currencies are up and sometimes they're down. If you purchase them when you're up, you're gonna pay more money. You purchase them when they're down, you pay less money. These things, no computer can teach you.
How do you monitor whether it's up or down?
The market, foreign currency market, just like share prices and bond prices, they have a foreign currency market as well, where you can go online and monitor the changes in foreign currency around the world. Daily, hourly, by the minute. How about that? Yeah. All right. So whether you realize it or not, you raise a hell of a good question. Okay. It's just one of those things that persons maybe on this side may not think about too much because we're on the domestic side here at home. But those persons who are certainly traveling and doing business internationally, that is forefront in their minds. Okay. As a matter of fact, sometimes some currencies even have to be hedged. And what does that mean? If you plan to purchase something 3 months from now, you may come up with a deal with the seller abroad and say, can we lock the price in at this amount? Because 3 months from now, the currency may go up and I'm end up paying more than I plan to pay. And then that seller will say, fine, I agree to lock it in, no matter what the price is, the exchange rate is, I'll still give it to you for the agreed amount. Others might say, man, I can't do that because I prefer to wait for the market, whatever the market is, you pay that. That's called hedging or not hedging. So all of these things are part of the foreign exchange process. Okay? But a lot of people don't have any idea about because that's not part of their world. Okay, for sure. All right, that's a good question. Good question indeed. Whenever you see the expression trade discount, it just means that if you're buying stuff in bulk as a merchandising company, that sometimes you get bulk discounts, and if you get a bulk discount, it's called a trade discount. That's all that is. Nothing magical. I hope everybody in here knows what a sales discount is. Anybody ever had a discount on selling something or buying something? Like when you're purchasing something, can you give me a discount? Anybody ever said that? No?
Jokingly, yeah.
Okay, I thought my wife was the only one who said, can I get a discount on that? So when you're selling something at a discount, you're selling it for less than the original price, correct?
Yes.
When you're purchasing something on a discount, then you're purchasing it for less than the original price. Or less than their invoice price, whatever the case might be. Same thing. Now, these things, and notice the textbook like kind of goes on and on about it, with all kinds of different examples to help you understand. You should read them. Okay. Don't mind me like defining it, saying stuff about it, and rolling on. That's just because I'm familiar with this crap. Not crap, you know what I mean?
He said.
But for you guys as students, you should read it all, no matter how bored and tired you are and fed up you are with it. You can't keep your eyes open anymore. Don't say the devil with it. Just put the book down, put the marker there, and go and lay down, catch a power nap for an hour, see? Then get up, and then go back and still read it. How about that? Because again, you may not see any value in it. I'm not reading that. That comes in the exam. He's not going to ask that. We try to predict, but it's not only for examinations. You're reading that stuff for your own personal use as well, and for professional use, depending on where you work, or maybe working in the future. That's the next thing. Because some people work some places for 30 years and retire, and other people, things happen on the job and they don't get to retire on that job. They get laid off. They get tired. They get, see, all kinds of things happen. All right. So sales and purchases discounts are not a problem. The percentage that they take off, we should be able to calculate those by now, hopefully. Like if somebody says there's a 25% discount or a 15% discount, we should be able to calculate that by now. Hope. The other thing you need to know in merchandising businesses, because who knows, maybe you never know, you might be working X place today, and next year or the year after, you might be working at a merchandising enterprise. I say, wait a minute, didn't you put that accounting class? Because now I understand some of this nonsense that they're talking about in the merchandising industry. Something which I wasn't aware of because previously I was in another industry. Not only that, this stuff is good for you personally because you're going to be buying stuff from merchandisers, looking for discounts, looking to negotiate, looking to buy foreign currency, looking to see when is the best time to purchase so that you could save money on the exchange of foreign currency and so on. For example, the Canadian dollars is around 79 cents a dollar. It fluctuates between 75 and 79 cents, which is great for me because whenever I send like B dollars, US dollars to my son, that converts to more in Canadian dollars because the Canadian exchange is less than $1. Did you guys know that?
Yes.
Yes. All right. So yeah, these are all nice things to know. You can benefit personally as well. All right, shipping costs is very important in merchandising because most, especially in the Bahamas, most of the stuff we have in stores, we don't make it, correct?
Very
Correct.
true.
Yeah. Can you think of anything in a merchandising store that is made in the Bahamas?
Jam,
Do you know of one?
guava jam.
Guava jam. Where do they sell that?
In the food store.
Yeah, in the food store. Okay.
Beauty
Well,
bread.
where in the Bahamas is it made?
Can't be one of the islands.
Yeah, so that must be one of the islands then. Yeah, the point is, Bahamians don't really focus on that stuff. Like we don't celebrate. Like yeah, we got the guava jam. Like we don't make a big deal. Like the hell is it? Because there's so many other jams, and we take our own stuff for granted instead of celebrating those people who find guavas year round and make guava jam. And strange thing, Bahamians don't like to support stuff with Bahamian soup for some reason. I don't know why. It's a
They
big
really
fight
do.
trying to get Bahamians to support other Bahamian stuff. Somebody asked me a long time ago, Ms. Wilkinson, you ever thought about writing a book? I said, sure. But I'll be a pauper and die from starvation if I try to sell it here at home. Because Bahamians are funny about stuff like that. We'll buy T.D. Jake's book, wouldn't we?
You would?
Yes, we would.
No.
So, Joyce Myers,
Not sure who that is.
Maybe.
maybe. Point is, we'll buy foreign books before we buy our own. And so there's no great benefit for the most part, unfortunately, yet for Bahamian, unless of course that is your dream. And then whoever buys a few, you're happy because it's not about making sufficient return on it. It's just about doing it. See? By all means. So yeah, these are the interesting things. All right, so if you're a merchandiser, you have transportation costs. Most of our stuff we import. 90% of everything we have in the Bahamas is imported, maybe more. We hardly produce anything in the Bahamas other than tourism and a couple banking services and some guava jam and a few other things. Okay, so just about everything else that we see in our stores, we have to buy them from abroad. Which means that when they come in, stores have to pay transportation costs, and that's why we have it in the accounting text because it has to be accounted for. And in order for it to be accounted for properly, we have to understand the difference between FOB shipping point and FOB destination. Anybody knows the difference? Anybody knows the difference between FOB shipping point and FOB destination?
What does FOB stand for? I'm sorry if that was a dumb question.
There's no such thing in this class.
Right.
FOB means free on board
Free is we mean freight?
or
You
freight.
said,
Free
oh,
on
okay.
board.
That's like thing then. That's like the stuff, the actual stuff. Like I wouldn't say bundles, but the weight accumulated from the merchandise, yes?
So sort out depending on what you're dealing with. But typically it represents the goods that you're bringing in, the freight.
Yeah.
Yeah.
The shipping
So
point.
shipping point means that,
Where it's shipping from?
yeah, what happens is wherever you buy it abroad, the seller will take it to the shipping point, the seller's shipping point. And the seller will pay for everything up to the seller's shipping point, wherever it is in the world. And then after the goods leave the seller's shipping point, the buyer is responsible for paying for everything else until the buyer gets it. You get that?
It's probably a lot of money.
Okay. FOB destination, on the other hand, the seller pays for everything until it gets to you here in the Bahamas.
Wow.
Okay. Who decides to do what when? It just depends. If the seller is trying to break into the market and get your business, he'll say, hey, I'll do it FOB destination. I'll cover everything because I want your business. But if a seller doesn't want it or need it, he'll say, dude, I'm FOB shipping point. I'm taking this to the dock. And if you don't pay for the rest of it, they'll stay on the dock. And some things actually stay on the dock for one reason or another. All right. So these are some important things to know, business points to know as accounting students. So it's not all about debits and credits, double entry and journal entries and all that stuff. It's about these other business things that come up because you have to know them, because when the transactions occur, you have to know what these things are in order to come up with the correct analysis, in order to come up with the correct journal entry. Because remember, we already said any journal entry that's wrong, it carries through right to until the very END. Okay. I don't think I need to say anything about debit and credit card sales because you can read that on your own. Plus, you already have a good idea of what they are. Okay. We mess with those things every day. People still use credit cards?
Not really. I mean, for the bigger purchases.
Yeah, interesting. The point she made, she said, not really, but you know, since you want to talk about it, yeah, maybe for more significant purchases. And if you're traveling, maybe. Because some places in the world don't want your debit card.
Right. They
Okay.
want to hold your credit card.
Yeah, so they could take things to the limit if they want to add stuff to your credit card and you're stuck. With a debit card, you could come home and take all the money off or transfer to another
And
card.
cancel, yep.
Yeah, exactly. But credit cards are not that easy. And so certain places in the world, you better carry a credit card when you travel. Because when you whip out your debit card, you could have thousands of dollars in the account. They still won't take it. Okay, for sure. Because the debit card is not as manipulative as a credit card. You come back home, they add some charges to it they didn't tell you anything about. You're fighting to get it off, and they say, what? What are you gonna do when you're back home? Try it. And they leave it. Then you have to go through a big fight to get it off, or just suck it up. All right. So that's the business side of it. Now we get to the business accounting side of the merchandising company. And so we started with a very simple income statement for merchandising business. You guys see that? Notice the statements are headed up the same way all the time. Did I tell you guys if you wrote the statement head up correctly, you get credit?
Yes.
Yeah. Like if you put the name of the company first in your test and the name of the statement and the date, you get 3 points just for doing that. Why do I do that? I do that because I want to encourage students to do it the right way, because that's the way it's done all the time, no change. Remember the conservative part of accounting, when we start doing stuff a certain way, we don't change it unless something extraordinary happens. And then if we decide to change, it's a big fight to change. And once we change, we stay with that until something super extraordinary happens. And the reason for that, accountants are conservative. We don't like to gamble. We don't like things that keep changing because it's hard to measure it that way. Accountants like pure conservative numbers that we can measure. We're buying property, we are going to record it at the invoice price. We don't care what the market value is, that the appraiser said, to hell with him. Until you're ready to sell it, then we can have that conversation. But as long as we're purchasing it and putting it on the books, it will be at the invoice price, period. And who doesn't like it, as far as the accountant is concerned, too bad. That's the rule. All right, so There you have it. Nice little clean merchandising statement. Notice there's something in this merchandising statement that's different from the income statement we saw at the beginning of this chapter. Anybody notice what's different? Let's see how observant you have been. What is different about this merchandising statement that you didn't see in the income statement earlier? Nothing?
Cost of goods sold.
Yeah, we have a cost of goods sold account. And we have what else?
Operating expense.
Operating expense.
Well, we have operating expense in the previous one.
Right.
Gross margin.
Gross margin. Okay. Those are the two components that we have in the merchandising income statement that we do not have in the previous one, which is a service industry statement. So wherever there are goods and services, wherever there are goods and inventory, we have two added features to the income statement called cost of goods sold and gross margin. Where we do not have any merchandise that being sold, then we simply have the operating expenses, no cost of goods sold and no gross margin. That is the difference between a merchandising income statement and a service income statement. Just remember, we're selling one thing or the other, goods or services. All right. So let's see, guys in the room. Mario,
Yes, sir.
who's the other guy in the room other than Mario?
I believe his name is Clinton.
Clinton,
Yes,
are you
yeah.
there?
Yes, sir, I'm here.
Okay, so this is for the guys then.
Oh,
Guys,
boy.
somebody has to be the devil's advocate. Accounting is not always the most exciting subject in the world. All these bloody deficit, credit, gross margin, cost of goods sold, and merchandising, inventory, foreign exchange, they could become a pain in the butt unless you love it.
Yes, sir.
Yeah. Okay. So we digress for a moment, but it's still part of the accounting thing at the end of the day. For the guys in the room, not the girls. Guys, what is the oldest profession in the world?
The oldest profession?
Yes.
Gotta be it has to be between something to do with the health field and numbers, whether it's math, whether it's accounting, whether it's
I would say
whatever
both.
it is. I
I would
don't
say
even want to say astrology because that would be drifting too far, but it's definitely between health and numbers. Something to do with health and something to do with numbers. Gotta be.
You know, I'm so happy to hear the answers coming from you young men. That means that you are not totally corrupt yet. Because if you
Oh,
were
no. That don't sound good. That do not sound good.
no, actually, it's a compliment. But you have to understand why it's a compliment. A lot of times we think that certain things do not seem like a compliment because they're not, we're not worldly enough about it. But it is. Here's why. The answers you guys gave would not be an answer that is typically given by somebody who is older and has been around a bit. For example, let me put the same question to the ladies in the room, see what happens. Ladies, what is the oldest profession in the world?
Prostitution. I don't know.
Yes.
Denise, I was gonna say the same thing.
Don't be embarrassed. It's been around long before you and everybody else, even before Christ came to earth. Okay? It is said to be the oldest profession in the world. Whether it is the oldest or not is debatable, but there's a reason why it is said to be. And that's because really, metaphorically, it's been around a long time. Okay? And so my question now that the two youngsters have been enlightened, I tell you, learn all kinds of crap in certain accounting classes. All right, so where's the accounting implication? Mario and Clinton, now that you have a new perspective on the oldest profession in the world, as put forth by a young lady, no doubt, is the prostitute's work the selling of a good or a service?
Mr. Wilkinson.
Somebody has to be the devil's advocate. This is all part of accounting. When
All
she's
right.
done with her, listen to me very carefully. When she's done with her accounting, her work, she goes and do an accounting as well. You know, she has a bank account, doesn't she?
I don't know.
And she probably she has an accountant that does her financials, depending on like how sophisticated she is, doesn't she? And some of them have much more money than many people,
Exactly.
including all of us in this room combined.
Exactly. And they make what we make in a month, they make that in less than an hour.
This
Yeah,
is
if you're a high class prostitute, we call them tall girls.
Mario, you heard this?
dog. They trying to keep a straight face.
Listen,
Continue,
it's
Mr.
all,
Wilkinson.
listen, it's all part of the madness and certainly part of the accounting cycle, is it not?
Understand. So I'm
Okay.
guessing that's a service and not a good then.
You say it's a service. Who
Yeah.
agrees with him? He says it's a service, not a good.
See, if I say it's a bit of both, you will say it has to be one, and I'm honestly not sure which one it is.
Well, that's okay, because that's all part of the discussion, and I will certainly say it has to be one. You're certainly right about that. So one says it's a service. Who agrees with him? Do we have a second?
I think it's a
I
service.
agree with him.
Yes, it is a service. Okay? It's like
Wow.
getting your hair done. It's a service, yes, but they use goods to fix your hair. Prostitution is like that. It's a service, but they use goods to provide the service. But fundamentally, fundamentally, it's a service.
This
It's
is powerful.
it's an unfortunate service, but again, it is said to be the oldest profession in the world. Not that it necessarily is the oldest, but there's a reason for it. And if I prick your curiosity now, sometime in the near future, you can Google it and find out perhaps why it is deemed to be the oldest profession in the world.
I
All
thought y'all were to say something along the lines of being a husband or something is like the oldest profession. But y'all come with this rocket.
Mario, don't go there. Let's let it
Well,
go.
yeah, being a husband might be when you really look at it at the end, but this metaphoric thing about prostitution being the oldest profession, because see, being a father doesn't generate any income unless you go to work to be a father, and maybe therefore they don't perceive that as being a profession. How about that? So again, the origins of the expression might be interesting. So when you get tired studying accounting, and like, man, let me take a break and Google that, see what's going on, kind of thing. All right. But now you know that it has accounting implications. That's really the point. All right. It's not a merchandising business. You know that now. And you certainly know that they need to have some accounting skills and understand some business skills in order to do what they do. Otherwise, they'll be cheated out of their money. And I can assure you that will not happen. Okay? For sure. All right. So this is your introduction to the merchandising income statement. You see the differences. The reason why we have a cost of goods sold is because we're selling goods. And goods that we sell have two components. It has a cost side and a profit side. So for example, if you make a pair of shoes and it costs you $100 to make the shoes, would you sell it for 100?
No.
way.
No, you would sell it for 100 plus profit, right?
Yes, sir.
So that 100 is the cost. That's what we call cost of goods. And so whenever we sell stuff, we have to take out our cost first. And what is left after cost of goods is called gross margin or gross profit. And out of gross profit, we take out our expenses. And if anything is left after our expenses, we call it net income. If nothing is left and our expenses are greater, then we call it a net loss. Does everybody see that? That's okay. You will, because you're going to see it again, for sure. All right. So let's get into the nitty-gritty then. Now that we've explored all the issues around the merchandising exercise, let's get into the actual transactions. Okay? Now that you guys are something of an expert in journal entries and posting, we should be able to walk through this and get out of this alive without too much stress. Transaction number one. What is the transaction? It's right there. What is the transaction?
A business exchange.
Well, I mean, what do we call it?
I can know how to describe it in this case.
You don't have to. It's right there in italics.
Purchase on credit.
Yeah, the transaction is a purchase on credit. I hope we all know what that means by now. God forbid. When you purchase, you're buying something on credit, which means that you will get it now and pay for it when.
Later.
Yes. What is the journal entry for this transaction?
Purchase inventory will be increased by 4,890, and accounts payable, seeing that it was bought on credit, will be increased by 4,890.
That's exactly how I was hoping you'd say it. Because remember, the more you say it, the more familiar you become. The more familiar you become, the easier it is to remember. The easier it is to remember, the less you have to study. And the less you have to study, the longer you remember it long after you pass your exam. How about that? It all works out when you commit early. Right? So, yeah,
And you were saying just do the journal entries before the T accounts? Or the
always.
general ledger, sorry?
No, journal entries always first.
Okay.
I don't know why they decided to put it underneath the general ledger accounts, but they should really put it on the top to make the point. But really, because sometimes it confuses students, like, really? So why is it at the bottom? And it should really be at the top. But the rule is journal entry first. Okay? So we debit merchandise inventory because we're buying it, and we credit accounts payable because we're buying it on credit. You guys are posting experts now, I hope. I know you know the name of the ledger account goes on the top, the debits on the left, the credits on the right, the balances are brought down. I hope you know by now what the normal balances are for each type of account. What's the normal balance for an asset, anyone?
Debit,
Debit,
Debit, liability,
credit,
equity,
credit,
income,
credit,
credit,
expense,
debit,
withdrawal,
debit.
debit.
sorry, debit.
Okay, very good, very good, very important. In order to reduce an asset, what do you have to do?
Gotta
Asset.
credit it.
Credit it.
In order to reduce a liability account,
Debit.
equity account,
Same thing.
Debit.
the same thing. Whatever you do, don't put the same thing in the exam and get it wrong, even though I know what you mean.
Me and debit, sorry.
Okay. What about revenue, to reduce revenue account,
Have to debit it.
Debit.
to reduce an expense account?
Credit.
Debit.
Oh my God.
Expense account, credit. To reduce an expense account, credit. To reduce a withdrawal account,
Gotta credit.
yes, very good. Those rules never change. You might change, but those rules never change. Welcome to the beauty of accounting. You come back 100 years and we're doing it the same way 100 years later. Okay. Not like get three appraisers together, you're gonna get three different what? You get three appraisers together, you get three different what? Are they all gonna come up with the same estimate? Anyone?
There are a lot. Yeah.
Yeah, I that's what I said. Can you repeat the question? Because it's like the merchandise inventory, you just paying liabilities for that when it, like, let's say the bill came up, so you're actually paying that. That's all.
Oh, okay. The question was, if you get 3 appraisers to do an appraisal on a property, what is going to happen with the results?
I'm going with the cheapest one.
I know. Will
Get
will
3 different prices.
they'll all come up with 3 different amounts, right?
Mhm.
Yeah.
If you give an accountant an invoice with the same amount and they have to post it or do a journal entry, what's going to happen to the
Wouldn't
3 of them?
would why would we give the accountant three of those entries if we could just let it correct the difference from, let's say, the cheapest one though?
Oh no, they're not connected. They're mutually exclusive situations.
Oh, okay.
Yeah. The point I'm making here is if you have 3 appraisers to an appraiser, you can end up with 3 different amounts. If you have 3 accountants post the same transaction, you'll end up with the same amount because accounting rules do not change. Appraisals, their opinions change based on their background, experience, whether they like the area or if somebody get them mad in that area, they see whatever. Opinion. So any number of things can change when you can use your opinion and your feelings and stuff, subjective things like that. But in accounting, we don't deal with subjective feeling type things. We deal with very objective, clear-cut things. And once we decide what the rules are, the rules remain.
What is an appraisal?
An appraisal? Anyone?
Yeah.
That is where.
Yeah. Document that show, I guess they value and show the value of a
Market
asset.
value.
Yeah. Let's say, for example, somebody dies and leave you a house in their will for some strange reason. And you decide you want to sell the house for some strange reason. The thing you want to do before you sell the house is go and have it appraised, which means find out what the house is worth on the market. And so therefore you will go out and find an appraiser. Does that help?
Yes.
Yes, the appraiser will come, look at your property, look at its condition, look at the roof, the building, the grounds, the area, all that stuff that they use to come up with their estimates and appraising. And then they will come finally say, in my opinion, this house in the market today in this area is worth $173,000. That's what an appraisal is, done by somebody called an appraiser. Okay. All right, so we have journal entry number 1, goods purchased on credit. We post it to the general ledger accounts, and we move to transaction number 2, which is
Purchases, returns, and allowances.
that is just a fancy name in accounting for when you purchase something and you don't want it anymore, you take it back.
Okay.
That's all that is. What's the journal entry?
Accounts payable is increased by 4. Why is the accounts payable increased by 480 if they supposed to be bringing the thing back?
Is it increased?
Oh, this merchandise inventory. Sorry. That's decreased, which means accounts payable is decreased. Oh, okay, never mind. So
No?
accounts payable is debited by $480 because they obviously brought $480 worth of merchandise back, and then merchandise inventory is credited. In other words, decreased by $480.
Absolutely. Okay. Absolutely. So because of that return, you no longer owe the supplier how much?
I didn't know you. Sorry.
Because of that return, you no longer owe the supplier how much?
$480.
$480. And when you credit merchandise inventory, you're taking it out of your inventory because you are giving it back to the
Manufacturer
or supplier, whoever
or
that.
supplier. Yeah.
Absolutely. On the balance sheet, merchandise is which of the 3 elements?
An asset.
Yeah, it's an asset. Normal balance for an asset.
Debit.
So if we return some, we have to reduce it. And by doing what?
Crediting.
Which is what we did right here. Does everybody see that? There's no magic. You just have to learn it and go through it step by step. No waving any magic wands. Like, none of that. Transaction number 3.
Wilkinson, I have a question.
Yes.
We're not saying, are we, for the transactions, when I read on this, it says the purchases of merchandise. The focus of the journal entries is accounts payable. That same diagram you showed us before, merchandise inventory. These the accounts that are only affected, or there can be other accounts affected under this?
When you say which accounts are affected, which ones you're referring to?
Okay, well, and all of these exhibits you're showing us now shows merchandise inventory is the asset and the liability, which will be the accounts payable, right?
Right.
And then sometimes even for the asset, we have cash. I'm asking, is it just these accounts that are always affected under this system, or?
Typically, yes.
Okay,
Some other kind of transaction would have to occur out of the norm to change that process. Other
right,
than that, it remains the same each time.
each time, okay,
Which is a good question, because again, once you learn the correct process, every time you buy for cash, the entry is the same: debit merchandise, credit cash. Every time you buy on credit, debit merchandise inventory, credit accounts payable. Doesn't change. Happens every single time, depending on whether it's cash or credit. And so once you get that fundamental part down pat, hardly ever changes. Right, for
so we
sure.
don't have to worry about any, I'm just trying to, like compare the other, I guess, balance sheet from my understanding. We don't have to worry about like any accumulated depreciations and
Oh, no,
things of that nature. Okay,
no, not at all.
okay,
In fact, accumulated depreciation will only come up with things like machinery and equipment. Okay.
right.
So in this case, it's merchandising inventory, no machinery, no equipment, no depreciation applicable at all. Okay.
So, but revenue could be involved at any point in time?
In what way?
I don't know. I mean, I'm thinking about money is generating into the business.
Oh, well, revenues would be the other side of the transaction. Remember, on this side, we are purchasing merchandise, correct?
Okay.
So we debit merchandise inventory and we credit cash or accounts payable. Now, once we purchase our merchandise, what are we going to do? Take our little stickers and price them, aren't we?
Yeah.
And we're pricing them to include what? The cost of purchasing, which is the cost of goods, plus our profit.
Right.
And then we go to your side of the fence, sell them. So the purchasing side is the receiving of the goods. The selling side is the selling of the goods.
Okay, I see what you're saying.
Absolutely. Okay, very good question though. Okay, to get that clear. And remember, selling is the opposite side of purchasing and vice versa. Purchasing is the other side of selling. So you can purchase for cash or credit, and you can sell goods for cash or?
Right.
Yes. So you guys are definitely on the right track.
So
All right.
not, so Mr. Wilkinson, it depends then on the business itself in order to have these type of balance sheets, say, like in my case, like in a banking company, obviously there would be something separate, like a different balance sheet, a set of balance sheets that would involve, because I'm seeing that there are a lot of balance sheets coming up, and I always wanted to know, like in our financials, I guess, why there are so many different balance sheets. It's coming together now, I guess, now that I see all of these different balance sheets.
Yeah. And of course, bear in mind that the balance sheet the form and type of balance sheet will depend on the type of business. For example, if it's a merchandising business like Kelly's or company selling goods, the balance sheet is going to look a certain way with cost of goods sold and gross profit and all that stuff in it, income statement, sorry. And the assets and liabilities will look different other than things like cash and accounts receivable. In the case of the financial institution, which is a bank, they're still going to have the same balance sheet, assets, liabilities, the same elements. It's just that the components of the balance sheet will be different because banking is a service and not a merchandising enterprise. Okay?
Right.
Banks do not sell goods. Banks sell services. What do you think banks sell, anyone? What do banks sell?
They
What do they sell?
service.
Money, man.
Well, they don't sell money, but what do they do?
They loan money and receive
Yeah,
profit
With interest
Interest.
from
Products
interest.
that we sell.
and fees.
yeah, banks typically sell loans. And so in selling loans, what do they make their money from?
Interest.
Of
Interest
course,
and fees.
and fees, God forbid, it's criminal. I can't see between bank fees and VAT is a nightmare. Of course, VAT we can live with in some cases, but VAT on things like insurance and medical bills and stuff like that, for poor people, it's a bloody nightmare.
Yeah.
Okay? So you go in for an expensive, big time doggone mammogram. And then suddenly, in trying to protect yourself to check on breast cancer, you have to pay VAT on the mammogram cost. Grandma,
NHI.
I'm just saying, yeah, VAT. Where you get stuck with it. You can end up paying scores and scores of dollars just to cover VAT costs. Okay? And then in financial services, VAT is charged practically on everything you can. If you sneeze, they charge VAT.
You sucking up air.
Of course, it's not the bank's fault, it's the government's fault. The government came up with that. They can decide what VAT will be applicable to and not. So for example, we dropped the VAT from 12 to 10, but we put VAT on bread basket items.
Yeah. And medication.
And medication, so you get it right back, because who buys the most bread basket items?
Poor.
Poor people. And if we don't
And
do anything else in life, what do? And medicine. Okay? So we still put the burden back where?
Right on the poor.
Of course. Why the heck we don't drop VAT for poor people and increase VAT for persons who earn incomes over $100,000?
Exactly.
How about that? But the problem is the people who earn 100,000, 300,000, 500,000, they pay the same VAT we pay.
And they getting breaks because they know hookups.
Let's not go there to the other side of midnight. Absolutely. All right. So welcome to the world of business. All of this stuff comes out of accounting, believe it or not. I tell you, accounting takes you in all kinds of strange places. All right. Let's see. Mario.
Yes, sir.
Once again, now that you've been enlightened, what is the oldest profession in the world?
Prostitution.
Good. Okay. Grasshopper. Now you are ready to move on to new heights. Okay. Next transaction, sales on credit. See, now we're on the other side of purchasing. We're now on the selling side. Sales on credit. What's the journal entry?
Accounts receivable is increased by 1,200 because they bought, they made $1,200 amount worth of sales. So they credited sales for the same amount, which is 1,200.
Absolutely. So whenever you sell on credit, it never changes. Debit accounts receivable, credit sales, just like on the purchaser side, never changes. Okay. And then you post as usual. Because now that you guys are master posters, we don't have to follow any of our arrows. We just look up and see. That's the beauty when you come 6 weeks into something and commit yourself, all of a sudden, the struggle is less. I wouldn't say it's gone, but it's less.
Why is there two different monetary values?
Somebody picked up on it. I was hoping, I was trying to
So-
see if I could sneak by and nobody would pick it up. In this
But this is-
transaction, we have two parts. How come?
I almost could have seen it, but like you scroll down too far, but I saw like an N30. I think the 30 mean like 30 days in a month. I don't know what the N mean though.
N means net, it means you have 30 days to pay the bill.
Okay.
But my question is, why do we have two sets of journal entries and two sets of postings?
Because it's two different two different parts to the one transaction.
Meaning,
Two different journal entries.
yeah, two different journal entries. Why?
No, I'm not sure how to answer that question.
That's okay. I'm waiting for somebody else to jump in and see what happens. Well, the first transaction is the sale for $1,200, correct? On credit.
Yes.
The second transaction is the cost of the sales, which we call cost of goods sold. What is the cost of the goods that were sold?
720.
So how do we account for cost of goods sold? What do we debit? What do we credit?
Credit
We-
merchandise inventory and debit cost of goods sold.
We debit-
Oh, hold on.
yeah.
So they have like $720 worth of merchandise and they sold that for 1,200. Yes?
Yes.
Okay.
And when you would actually have read that section again and looked at it again, you confirm that in your mind, like, yes, that's exactly what happened. So goods costing how much?
700.
Sold for.
1,200.
The profit therefore is.
I get the calculator, but the mental maths ain't kicking.
720 and 80 is 8 and 4 is 12.
Yeah, someone else can take that one still.
480 is the profit.
Boom.
The thing is, whenever you have merchandise involved, and you make a sale, you have to make two entries, one for the sale and one for the cost of goods sold. Why is it that merchandise inventory is credited?
Is there some of the goods gone?
It's gone. What's the value of the goods gone?
720.
Absolutely.
So tell me something, Mr. Wilkinson.
Hmm.
Why they just didn't do the first, why they didn't do it for the 480? Why the 1,200? The difference between, because you're already accounting for this 720. Why are we accounting for it again in this $1,200? Why not the difference of 480?
I think
Well,
that also.
we're not really counting for it again. Here's what
sorry?
happens. Let's say, for example, after these two transactions, right? Let's say after these two transactions, we do an income statement immediately afterwards for the manager. What would be the first thing in that income statement for this merchandising company?
What if that would be net sale
Of how much?
of 1,200?
And what's the next thing that you saw in that income statement for merchandising that I showed you earlier?
Cost of goods sold,
Which in this case is how much?
720.
And what's the third thing I showed you that was unusual in the merchandising statement?
The gross margin,
Which in this case is?
480.
That's why we do it like that,
Oh, okay.
okay? This is just a single case, but that's why we do it that way,
Okay.
okay? Absolutely. Good question, actually. Man, you guys are beginning to think about what you're doing now. And that's when accounting becomes interesting. Because now, instead of working with just the rote mechanical side of your brain, You are now exploring the analytical side, wanting to know why the hell is this that way and that way. And that's what accounting is all about, because accounting is all about analyzing transactions all the time. Why is it this and why is it that? Why is it not the other thing? Okay. Okay. Remember, there's a commentary, I hope, at the bottom of each of your journal entries. Please read them. Read everything. Because in reading, you'll pick up all kinds of little bits and pieces. Okay, guys, like when you take a real, this is for the guys in the room again. Are you guys still there? Clint
Yes, sir.
and Mario.
Yes, sir.
When you take a young, sexy girl out to dinner in a mini dress and all that, hair all fixed up, lips all colored and so on, nothing wrong with that. However, you must not allow that to cause you not to do what?
Analyze.
Alive.
Yeah, and look at some details.
Yeah, yeah.
Yeah, accounting is
Dang
like that. So when
Go to
you
my
read,
house. I got a movie picture.
yeah,
What?
because if you don't, you might run into trouble. Accounting is like that. Like, you don't read these comments and other stuff, you might miss something important. Then test time comes, man, I don't remember that. Of course not, because you never read it. So if you don't read some extra stuff and you get eggs, then you say, what is it? I didn't know that chick was like that. Then obviously you didn't read. You were too busy.
Okay.
Yeah.
Google Gaga, you know, but a mini skirt.
Yeah.
Analyzing.
Yeah, looking at the other stuff and not looking at any details until after the fact. Okay, so there you have it. That's in a merchandising business. Whenever you make a sale, the rule is you have to make 2 entries. If exam time comes and I give you a question like that, and you don't make 2 and you lose those points or 4 points for that area, you have nobody to blame but yourself. I've said it a few times. You must make 2 entries and do 2 postings when you're making a sale for merchandising enterprise. And now you know why. Okay. Next entry, transactions. All right.
I'm giving the line. Let me see something.
What is the transaction?
Except return a part of merchandise.
Is that what we call it? We have a
No,
form fancy name in
It says
accounting.
sales and returns allowance.
Yes, sales returns and allowances. See, if you say that to an accountant anywhere in the world who studied accounting, they're like, their eyes would light up. They know what that means. If you say any other version of that, they'll have this big question mark. Like, I'm beginning, especially if you say it's an Indian accountant. They're very good accountants, by the way. So you said it funny to me. Give me to think that I'm not really sure. You know what I mean? And then they'll try to correct you. It means sales returns and allowances. That's what you should have said. Because they're expecting that. Because it's the same everywhere in the world. See, that's the beauty of accounting. So what does sales returns and allowances mean?
Bring the thing back.
Yeah, you sold something and the customer did what?
Bought it back.
I don't want this anymore. Should you argue with the customer?
You shouldn't.
No, but you can question it.
No, depending on what it is, like it's an electrical part, computer, or something like that, underwear, the question that. But other normal stuff, you don't fight with the customer, just change it. Because you keep fighting with the customers unnecessarily, then they stop coming there.
Yeah.
So the thing you're fighting about, you could lose 10 times more than that. Then they're gonna go out and badmouth you. They can tell other people don't get it because you stinky. Or whatever, come up with stuff, call your names. Okay? And start lying even because they're still mad. Okay? So if it's not worth it, don't fight with the customer, just change it. If it is something like underwear, something like electric and stuff like that, that really shouldn't change it. You try your best to explain to the customer that it is underwear, it is electrical. The other thing is to mitigate against that is those things that you are not prepared to exchange, put up a sign. You follow? No exchanges on, so the customer knows. Once they leave, they shouldn't come back, correct? But if you don't have that, they're gonna come back if they want to. And we have to make sure we don't lose a customer for life over a couple of bucks. That's my point. And some other potential customers who are going to sway away from your business. All right. So yeah, you sell something, the customer brings it back. What's the journal entry? And for how much?
Hold on, pause. Returns and allowances, return.
What's the journal entry and for how much for the return?
Okay, so they brought back $300 worth of merchandise inventory. So you're gonna credit accounts received. Hold on, pause. Sales and return. Sales and return is a usual. Sales and returns has the usual credit balance. Yes.
Somebody answer yes or no.
I would think so because it's under owner's equity.
He's asking, does sales return and allowances have a normal balance as a credit or not?
It looks like it's under owner's equity, so I'd assume so. Boom. So if they bring in back $300 worth of merchandise inventory, it's gonna decrease.
So yeah, it's normally a debit balance in the asset. So you're gonna credit the thing on the inventory.
Yes, sales returns and allowances are always debited.
Debit. So you're gonna credit, say the inventory and debit the sales and return.
Okay, why do we credit inventory?
Because that's the assets, which is always a debit balance.
I know, but why do we credit it?
Oh,
And are we really crediting inventory?
Isn't it being increased? Because are they bringing more inventory back?
I don't see inventory. Maybe it's my glasses.
Accepted return of part of merchandise sold on August 7th for full credit.
What do we debit? If you look at the journal entry, what is debited for $300?
I see what's debited. I try to understand
What is
why.
credited?
Accounts receivable.
Accounts receivable.
Accounts receivable. Why?
Because the accounts receivable is always a debit. So if you wanna, you have to credit it, which will decrease it.
Yes, remember when you originally sold those goods for 300, you debited what? Accounts receivable, because you don't expect payment from the customer, and you
Right.
credit sales. Instead of getting payment from the customer, they brought it back. So you have to debit an account called sales returns and allowances and credit accounts receivable because you're not going to get that money anymore because they brought it back.
Hmm.
That's why we credit accounts receivable, to reduce the amount we expect to get from the customer. Because we're not getting it anymore, they brought the item back. Does that make sense?
It does.
Okay, so we debit sales returns. Okay, which is gonna be.
So debiting.
Mhm.
So debiting sales and returns increase sales and returns then.
Aha, now it's getting interesting. Does sales and returns debit increase sales or not?
See, you know, credit increase sales, but we're talking about sales return.
The normal balance for sales and returns account is debit. What's the normal balance? Yeah, what's the normal balance for sales?
Credit.
So a sales return amount would do what to sales?
Decrease sales.
Correct.
So that's the normal balance of debt. See, now we're clicking. Now we're getting somewhere.
That's the whole idea. So when you do your income statement, it'll show sales of X amount less sales returns and allowances equals net sales.
So I mean, for like a merchant, what is called these people now? Merchandising business. I mean, there's more components to their financial statements then, specifically the income statement.
If they have more what?
Components.
Yeah, you can use that word. More components would be okay for the moment, for sure.
Okay.
The two that we saw right away were what? Cost of goods sold and
Gross margin.
Yeah, our gross margin. Okay. All right. So we're getting deeper into it, but a deeper understanding also. Is this other entry attached to the first one?
Yeah,
Oh. So why do we have two entries for this now?
because it's a merchandising business and being simple.
That's true. I can't argue with that. What do we debit in the second part of the journal entry, which is connected to the first part as well?
The assets.
What do
The
we
merchandise
debit?
inventory, to be
How much?
specific, for 180, because that's $180 worth of goods they brought back.
And what do we credit?
We credit cost of goods sold because they didn't sell it. I mean, they sell it, but it didn't stay a sale. So we have to bring that back here.
Correct. So we have to reduce cost of goods sold for the
Boom.
item that came back. And since it
Boom.
came back, we put it back in inventory to resell it, correct?
Mm-hmm.
So we debit merchandise inventory. Simple as that. So again, when we have a return item, we have to record the reduction in accounts receivable, and we have to record the reduction in cost of goods sold, because both of those accounts are affected by the item that is returned. Okay. When you do a little practice on this area, it'll definitely be helpful to get you to fight with that a little bit more, because sometimes it's clear tonight, and then when you go to sleep and get up, you're like, man, did I even ever have that discussion? Okay. Which is where the practice side of things come in. Okay. Next transaction.
Collected in full for sale. Less the return on August.
What do accountants call it?
Receipts on sale. Or
No,
accounts.
Yeah, receipts on account. What does that mean?
To receive something.
Okay, signing off.
In accounting, when you see the word receipts, you're getting money. You should be happy. In
Jump for
accounting,
joy.
when you see the word receipts, means you're getting money. Receipts on account means you're getting money on an account that somebody owes you money on. So, how much are you receiving?
900 buckaroos.
What do you debit?
You debit cash because cash is being increased by 900 bucks, and you credit accounts receivable because that's $900 less that you have to expect in the future.
Yeah, your receivable account has gone down by $900, which is a happy time because now you have money to put where? In
Where
the
have you
bank.
put it?
In the bank.
Oh,
To do more business. Remember, if you have an accounts receivable account that keeps getting bigger and bigger, is that good news or bad news?
that's bad news. It's horrible
Why?
news.
Why?
You see why?
Yeah, why? Why is that bad news?
Because the people ain't paying.
Yeah, because you're making sales where people are not paying. That's not good. Making sales on credit is only good when people are paying you back. Okay? Just remember that when you go into business, be careful who you give credit to. Everybody will come in with a smile, just like when you go into a financial institution to borrow money for a car, property, or house. And then when it's time to pay, all of a sudden the monsters come out of the woodwork. Meaning, they don't want to pay. Okay? All right, so now we know what cost of goods sold are. There's another expression called cost of goods available for sale. And we're going to see in a moment how those expressions come into being and where do they go. Okay? But we certainly know by now what cost of goods sold are. We know what sales returns are, debit that reduces sales. We know what purchases returns are, credit that reduces purchases. See? Are we going to remember them forever and ever? Not yet, because we have to go back and study them again and then do some more practicing and stuff, and then we remember stuff. Okay? But we have an idea so far. Of course, what can I say? There's no substitute for reading. Okay? Reading. And then if you get stuck, like you guys asked some amazing questions tonight, There's no substitute for those kinds of questions. Okay. The question somebody wanted to know, when I assign homework, like I don't like grade the homework and give it back to you. I don't grade homework in accounting for two reasons. One, I left graded homework behind in high school, depending on the subject. And two, I have found in my experience that when students go home, they get creative. And what I do is I assign homework for two reasons. One, to encourage and sometimes enthrall students to go home and practice, because without practice, dog eats your lunch. Secondly, when you are practicing, you come across your problems all by yourself. And then you start getting creative, like making a note to ask questions or sending an email and saying, why the hell did we debit this? And then it gets interesting. So it forces you to start thinking on your own and asking the appropriate questions, which I've seen left, right, and center throughout the semester so far. And usually I see far greater results that way with students. Okay? And long after the examinations are done and passed and you move on, that exercise serves you in ways that you probably won't even remember. Okay? All right. The final thing I'm going to talk about tonight, and then I'll let you guys go and take a break. It's been a long day, evening, no doubt, is this income statement for class. Your book might call it something else, but it's the same principle. And this income statement is a more extended merchandising income statement. Okay. So let's take a walk through quickly, and then that's where we'll end that day, so you could ponder on all that we've talked about so far. This statement opens up with net sales of how much? How much?
957,300.
Why do we say net sales? What does net sales tell us?
After all the expenses was already taken from it.
I was hoping you'd say that so I could say, no, that's not the answer, but it's a good guess. Net sales means sales after sales returns are taken out. When you get around to reading your chapter completely, you'll see that. And so when you see net sales again, you'll be able to confirm what I said, that it represents the amount of sales after we deduct sales returns and allowances. Remember, sales has a credit balance called revenue, and sales returns and allowances have a debit balance, so they will reduce the revenue by whatever the return amounts are. So far, so good?
Yes,
Right.
sir.
Second step in the merchandising income statement is the calculation of cost of goods sold. Previously, it was just given to you as one figure, but in the real world, it actually has to be calculated. And so how do we calculate cost of goods sold? We start by beginning with what?
Merchandise inventory.
At the end of the previous year or the beginning of the current year. So it's like opening inventory, current year, closing inventory, yeah. So what is the opening inventory in this example?
211,200.
Okay, and then to the opening inventory, we do what?
Buy some more.
Yeah, buy some more. We add purchases of how much?
505,600.
Yeah, I like that. Buy some more. Make it very practical. Something Rupert Roberts would say. He wouldn't say we should consider making some more purchases. No, buy some more chicken or whatever. All right. So we buy some more by purchasing some more, and then what happens next?
People brought their things back.
Did people bring things back, or you took something back?
We took something back that they brought.
See, purchase returns means whoever purchased it took it back.
Mhm.
So some of those purchases you made out of that 505 is
Mhm.
taken back. How much?
Hold on, pause. So that mean like that could also mean that some of the inventory that we bought from our supply, we took it back.
Once it gets into inventory, we normally don't take it back unless we find something wrong.
Okay.
But
But
it-
nonetheless,
But it can happen, whether it's an inventory or it just arrived. Once we take it back, it is called purchase returns.
mm,
And what does purchase returns do to the purchases that we made?
it decreases it
Why?
because that's less inventory that we now have.
Yeah. We returned some of it, 31,000 and change, and so we have that much less. So what are our net purchases now after the return?
474,496.
Absolutely. What's our next cost?
What does freight in? Our next cost is cost of goods available for sale. What does the freight in mean? That's like more inventory would just come in.
Well, freight in is a cost before cost of goods because freight in is part of cost of goods. When you buy goods from abroad, they have to be shipped.
Okay.
Freight in is the shipping cost.
Mm,
How much is the shipping cost?
32,944.
That's part of your cost of goods. So now that you've accounted for everything, what's the next line in this income statement?
Net cost of purchases.
Net cost of purchases, net of what? Two things. One thing, net of returns. So we return some stuff and we reduce purchases and then we add freight in because they have to be shipped. And so our net purchases becomes how much?
507,440.
Indeed. And
I got you a quick question.
definitely.
Is allowances discounts?
Which allowance?
Okay, you see like how it says last. You see like how it says last purchases and returns? It says last purchases, returns, and allowances. I know what purchase returns
If
is.
they are discounts as if they are synonymous, like if discounts and purchases returns are the same.
I know what purchases returns are. You say purchases returns is when we either carry the stuff back to the seller or the people bring the stuff back that they purchased from us. But what are the allowances?
Oh, allowances is just an expression that we add on to the return to say that the company is allowing for the return of the goods.
Oh, okay. Okay.
Okay, that's all. Okay, it's an allowance, meaning that, hey, we've agreed that we will take the goods back if it's being returned, and vice versa. If it's a purchase, returns and allowances, the seller agrees to take it back. He allows for it to happen. Okay. So after all of that, what is the next line in our income statement?
Cost of goods available for sale.
Cost of goods available for sale, and that is made up of which components?
The merchandise inventory that rolled over from the previous year.
Yes.
And the merchandise inventory that is left at the end of the current year in the operating cycle.
Well, is it really, which amount are you looking at?
I think I'm looking at the wrong thing. Never mind. Okay, the cost of goods available for sale is comprised of the inventory, the merchandise inventory that rolls over from the ending of the previous year, as well as the net cost of purchases.
Good.
Of the yeah.
Good. Don't complicate it anymore. Absolutely. We add their inventory from the beginning of the year rolled over from the previous year, plus net purchases for the current year. And we've seen how we arrive at net purchases. Okay? And once we arrive at net purchases, we add that to the previous inventory from the beginning of the year. And together that equals
718,640.
What do we call it?
Cost of goods available for sale.
Indeed. So that's what we have during the whole year to sell it.
What's the income
Now,
statement?
what happens next in the statement?
Yeah, it's saying that they've taken away the inventory that we have at the end of the year, but I'm trying to figure out why.
Well, we take stock at the end. When is this income statement done? At the end of the?
At the end of the year,
And so what we're trying to find out,
how much
how
money we made.
much purchased and how much inventory we purchased for the year,
Mhm.
along with what we had at the beginning of the year, and how much inventory is left at the end of the year.
Mm.
And so how do we find out what's left at the end of the year? We have to take everything from the beginning of the year, plus everything that was purchased during the year,
Mhm.
minus what?
What's left?
Well, minus ending inventory.
Yeah, the total amount, that is, sorry.
And how much is the ending inventory?
The ending inventory is 193,200.
How did we get that figure in the real world? What do we do?
We took away. Oh, you count it. Like if they have a periodic.
You close the store and count stock.
Yeah, if you have the periodic inventory.
Kelly's will not be open today because of stock taking, and that's where we're trying to get it.
Yeah.
Okay.
That's usually done when they have a periodic inventory system, yes?
Correct.
Boom.
Very good. This crap is beginning to settle in more and more. Not crap, you know what I mean? Are we done with the income statement for this merchandising company?
Not quite.
What else do we have to look and calculate?
The cost of goods sold.
Which is?
525,440.
And how did we get that?
We took away the stock that was taken at the end of the previous year, minus all of the goods that we had that rolled over from the ending of. No. We took the goods, the stock that we counted for the end of the current year, and we minus that from the goods that we had rolled over from the previous year, as well as all the goods we bought. The net amount of goods we got for this year.
Good. Which we call goods available for sale.
Boom.
Which we subtract ending inventory from stock taking. And that gives us what?
525,440. Which is the cost of goods sold.
Which is the cost of goods sold. Are we done now?
No.
No. Now you see why accountants get paid the big?
Yeah, man. Plenty time, plenty skill.
And this is just a little itsy bitsy company. Well, not itsy bitsy, but relatively
crazy.
Okay. So are we done yet?
No, we have to calculate the gross margin.
Well, how do we do that?
Minus the cost of goods sold from the net sales. And from that, we get 431,860.
Are we done yet?
No, we got to take away the operating expenses because the what do you call it? The company had to run, not to function.
Yeah, it has to function from day to day. Salaries, utilities, transportation, gas, stamps, whatever you can think of. Operating expenses. How much?
313,936.
And it's only when we take that away from gross margin, we finally come up with our
net income
of
117,924. All of that just to make that? Wow, is that good or bad?
Well, take out your calculator and let's do this. Take 117,924. Good question, though. Is that good or bad? You're beginning to think like a real businessman.
I feel like we got to calculate a ratio or something.
Well, put 117,924 in the calculator. Divided by net sales.
957,300, which means how you do this again? Multiplied by 100. So that means for every net sale, for every net sale, we made $12.31 net income.
Well, what did you get when you calculated?
I got 12.31%. That's after I multiply it by 100.
So basically, your return on your investment was 12%.
Yeah.
In other words, you had sales of 900 plus. After all expenses, you're left with 117. So your return on your investment is 12%.
I guess that's fairly well, eh?
Well, can you earn 12% in the bank?
I do.
Can you earn 12% in the bank?
No, Karen, less than 1%.
Exactly. So if you can earn 12% by running this business, would you put your money in the bank or run this business?
I'd run the business.
Does that answer your question then?
It does.
It's not bad, it's damn good compared to current return on your investment. See my point?
After you compare it to other competing companies, though, what if other competing companies get like, 30 is probably like illogical.
If they're the same size company as yours doing the same business and they're getting 30, then you need to investigate to see what they're doing right and what you're doing wrong, or what you're doing right and what the hell they're doing, because they might be
Yeah.
cooking the books,
Yeah, they probably are.
so
Probably
to
are.
speak. Okay? So you have to be careful watching the other grass. It may not be as green as you think. You don't know what the hell they're doing. But for all intents and purposes, 12% is a decent return by any stretch of the imagination. And so therefore, this owner has an incentive to continue doing business. Do you understand?
I do.
All right. So way to go. There's some excellent questions. I didn't walk it through by accident. There's a reason why I went through all that, and it was not just so that you can calculate cost of goods available for sale, cost of goods sold, ending inventory. That's what's important. But also, if you notice, a lot of other little interesting accounting, business, practical things came out of the whole exercise. All right. So we're going to stop there. Please, if you haven't read the chapter yet, go ahead and read the chapter to the end, and then go on and read chapter 7. Because next week we will finish the few points that we have left in chapter 6, and we're going to dive headlong into chapter 7. Of course, that means that soon, perhaps after chapter 7, there'll be some homework coming for you to practice. Nobody don't grade homework. You just go and practice like a basketball player. Just keep shooting hoops. And when you get stuck and the ball wouldn't go in, send me a text. Or when we come back to class, say, hey, man, I've been trying to get through this, whatever it is, inventory calculation, and it's not working. I don't know why. And then everybody gets in it, because whatever you ask, everybody gets into the pot. Okay. All right. Any other questions before we break? Anyone? Fantastic. Happy reading, happy studying, happy suffering. Remember, the more you suffer, that means you're getting better at what you do. Don't worry about it. When you feel tired, sleep and get up and go back to it, and you'll be fine. All right. Have a great week, and I'll see you guys on Monday. Your grade should be coming up sometime soon, so stay alert. I don't know if the institute will ask me to send it to them and they send it to you. It'll either be that way, or I'll be sending them to you individually. Okay. Either way, it will be forthcoming within 48 hours or so. All right. Have a great week, and I'll see you guys on Monday. Remember, I'm here 24/7. If you need me, send me a text, send me an email. If you get stuck on something, let's get it unstuck so you can get on with the business of studying and practicing more accounting. All right. Take care and be safe out there. Remember, there's a war in Ukraine, but COVID is still around, even though they're not talking about it for some reason. All right. Take care.